Hello everyone, Vladimir Ribakov is here with you. Welcome to my weekly review for 11th of July 2011. Well, previous week was very fundamental week. I discussed about it a lot and I've said that during such weeks we first of all just have to see how the market uh, gets ready for the fundamental news and how it behaves after that. And we got a big mess after the Friday news non-farm payrolls. Why? Because the expectations were much higher for additional jobs places actually to the US market, but the reality is much worse. And the market actually um, it replied with very big volatility, up and down, very big zigzags, and finished um, well not to here, not to here. Classical zigzags on not clear situation on summer months. Don't forget, friends, we are in July and August. As I've said, close to middle of July the volatility comes to its end, and usually, well, I don't take exceptions as 2007, 2008, which were very, well, critical years to the market actually. I'm talking about usually situations. July and August are very less volumes markets. What do we have for this week? We have on Tuesday trade balance in US, and we also have on Friday European bank stress, bank press. So let's see that. I want you to see that. This is the one. Bank stress test results, and also the UOM consumer sentiment. So let's see. After what happened with the non-farm payrolls, I'm not sure the customer sentiment will be so positive as expected. So it looks like the US is in bad situation. Europe continue to be in bad situation despite the increasing interest rate. Despite of this fact, the euro lost its power. Right? So what does it all mean? It means we are going to have more zigzags, friends. It is bad situation in the market. That's the truth. And it looks like nothing long term as for now can't happen yet, and the market will wait for something more clear. That's for the fundamental area. Now let's go for the chart and try to see what can we still enjoy from. Let's discuss first of all about the euro, the problematic euro against the very problematic US dollar. This is daily chart. That's daily triangle. If you take a look, it's 1, 2, 3, 4, 5, 6 spots on the triangle band. 3 from each side. Now we are on the 7th. 1, 2, 3, 4, 5, 6, and now that's the 7. Usually on the 7, immediately after the 7 comes the break of the boundaries. Will that be the same situation just right now? Could be. Could be. But we should remember that's a bullish triangle. It should break up. What happens if it breaks down? Is it still okay? Well, in this case, we still have to remember we have critical support around 140 and even one lower on the 200 moving average. And if you go for the weekly chart, then we are still sitting on the 20 moving average of the Bollinger Band. So everything could happen now. It all depends fundamentally. This technical triangle could be just erased as it is with zigzag moves. That's why I recommend to stay out of the euro as long as it continue to move in this range for long run, and to look for only short term possible trades. If you take a look on the 4-hour chart, also still nothing. Possible divergence, but the stochastic still nowhere, and still nothing to do. So we are out of the euro. Very interesting pair is dollar yen. That's the uptrend line. It was blocked just on the lower side of this line. If we take this channel, we can see we have clear boundaries. It also could be treated as a wedge on the daily chart, right? As a wedge, kind of a wedge, and that's a bearish pattern. But is that worth to take a risk already now, and before this uptrend line was not broken? I'm not sure at all. I prefer to wait for a daily break below. If you want to be aggressive, then okay, try to attack with the 4 hours break below, retest to make sure it's not a false break, and then bam, all the way down. For more conservative entries, well, maybe it's even better and more recommended to wait for weekly close below the 80, the psychological level 80. If the weekly chart closes below, we are going for long right down, friends, with possible target at 75 and maybe then even 72. So that's about dollar yen. It becomes very interesting, especially after the non-farm payrolls. What about other interesting situation? By the way, if you take a look on the dollar yen and all involved with the dollar yen, then take a look on the New Zealandian yen as well. It begins to be a weekly divergence here, right? And on daily chart, it's also a divergence. So it's only question of time when we are going to see a retrace. We could see little more right up, but it will be very, very, very limited, and the big retrace down will come if the dollar yen will actually break the 80. Then it will lead for all yen crosses to crash. The same about the euro yen, which moves on the daily sideways moves here, right? It's only question of time, and it all depends on dollar yen. Once again, 1, 2, 3, 4, 5, now probably 6, and then should become the 7. That's from the yen areas. Now let's see another interesting situation, and let's see the Australian. Australian is very interesting pair. It broke up this downtrend line, right? This inner, I call it inner triangle, and should continue up all the way at least until 110. But see what happened here, right? See what happened here. It still cannot actually break this resistance around 107.60. You see, it still sits on this resistance, and it has difficulties to rise up. Plus, if it will not succeed, the stochastic divergence could take actually a lead and could retrace all the market down. It still does look bullish, but we must pay attention for this divergence. If we take a look on the weekly chart, also it looks like a possible last up move to 110, maybe 112, to complete the divergence and then retrace long term down, right? And that's the critical uptrend line. As long as it holds, nothing to talk about down move. But when this line will be broken, which by the way is held by 20 moving average of the weekly chart Bollinger Band, then we are going all the way down. And that's how we should treat Australian. Stay bullish because of the daily break above the downtrend line, and well, positive sentiments from everywhere, but respect the divergence if it's completed. And if it's completed, I mean by a bearish stochastic cross down with bearish candle. That would be a signal to get out and just sit out. If it close about the 107.60, actually close, then it will probably give the push for bullish move. Same about New Zealandian, looks bullish yet, but only question of time. This divergence is not going to lie. It's only question of time until it will be actually blocked, stopped, and we will see long-term retrace. That's the weekly divergence. Only question of time. So once again, stay bullish yet, but get ready for serious retrace. Serious retrace. That's about New Zealandian and Australian. Dollar Canadian, well, it broke the flag, but once again, before the news, the only thing we can do is just take small position just to be in before the news. It actually, if we take it here with the boundaries, it actually broke down, retraced to retest the flag. No idea where it's about to continue. There were very good news from Canada, but well, it's all about it looks like that it's all about the US dollar right now, and we have to see how it's continue from here. It could go up again and retest the 20 moving average and then down, because the sentiment is still bearish actually for long run. But as for now, I prefer to stay out of the dollar Canadian. Very confusing situation, especially on the short term charts. Very zigzagging, you see? Bam, 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 all the way, so quickly. You can't actually work with that. Every candle points change the direction. It's crazy, so stay out of that. What about the franc pairs? If you take a look on the dollar franc, we are still on the sideways moves and still on the downtrend line. So it is still was not broken, and we are still waiting. All the franc pairs will be affected by this pair. The same as about dollar yen, right? The same as the dollar yen pair is affected with the dollar yen, with the the yen crosses affected from the dollar yen actually. Now the same Swiss franc crosses will be affected by the dollar franc. And as long as it sits in this channel, well, the pairs will continue to zigzag. But once it will break the channel and the downtrend line and these sideways moves above 0.8540, that's what could bring us the up move. The investors are still bearish long run, but from my point of view, this pair is also about to change direction. It will change for sure. Only question of time, because the monthly chart is on critical area, very critical area. The weekly chart is divergent, so it's a question of time. Only question of time. It could go more, of course. If it breaks down, it could go more, maybe even to 0.80. But the retrace, when it comes, will be powerful, long run, long term. That's my opinions from dollar franc. But as long as it's on the sideways moves, well, it's on sideways moves. That's why we don't touch it. Euro British pound broke the 20 moving average, broke the 50 RSI, right? But not so clear. Not so clear. It could be the same situation as the previous time, you see? Break and immediate retrace. I am bearish for Euro British pound long run, as same as the investors. If you want to go for the conservative, then just wait for the break of this uptrend line, weekly uptrend line. Once this line will be broken, we begin the down move, and 0.80 will be actually a target. So I am bearish for Euro British Pound long term. For short term, let's see once again how it behaves now on the 20 moving average of the daily Bollinger Band. It could be the same situation as on previous time. Break, looks so good, and then bam, up again. And also it still sits on the daily uptrend line. So we could easily see quick retrace up. That's about the pairs, friends. About other things as commodities and indices, let's quickly go over them. That's the gold, which continue to rise, and it is now going to retest this broken uptrend line, and this level, which is also resistance around 1555, 1560, becomes very critical, but it looks like they continue up. There is also a divergence and also question of time only when it will finally take effect. And the answer is simple: as long as this weekly uptrend line holds itself, the uptrend will continue. But once this line will be broken, the 50 level of the RSI will be also broken, and then we could talk about long-term down move for the gold. And until then, stay bullish. Very simple. Go with the current situation. Well, what about the indices? Same stuff. That's the S&P 500, right? Continue to rise. We discussed about it. As I said, if it will break the previous high, right, I will believe it's going to 1430, and that would be the best sell area ever, probably. Until then, we might have a head and shoulders here, shoulder, head, shoulder. So I prefer to stay neutral for the indices, with a get ready situation to sell. If we take a look on the daily chart, we have 1, 2, 3 waves. Now a bearish stochastic cross, but it could provide with a little correction down, but it should continue up. So I'm still bearish, as I've said on the previous week, and I will, as long as the uptrend line is not broken. It's not broken here. So everything could just happen, actually. And as long as the budget of the US remains so speculative, right? As long as this issue remains an issue, central issue, the markets will continue to zigzag. Well, I wish I could say something different, but that's the truth. The market will continue to zigzag, will continue to erase short stop losses because of the zigzags. That's why I say, friends, during summer, stay as lower risk as you can. Respect the market, it will respect you back. That's how it works. Friends, I wish you a fantastic week, and thank you very much for your time watching this video. I'll see you on the live trading room this week. Thank you very much, and I wish you only a fantastic week. Yours, Vladimir.